In the last video, we introduced the concept of a prepaid expense asset, which gets used up as you use it throughout the period of time. Now we're going to run into a more practical issue. So you're reviewing your transactions and you see Spotify $12.99 billed for June the 18th. It seems simple. It's a prepaid expense, and you've identified it as this. So you record debit to your prepaid and credit to cash. And then you're done, right? Well, as is usually the case, not quite. So here's the issue. Your subscription runs from June the 18th to July the 17th. But your financial reporting is June the 1st to June the 30th. And these don't match, which means one payment spans two periods. I know what you're thinking, ugh. So let's break it down. From June the 18th to June the 30th, you've used part of the service. From July 1st to July 17th, you haven't used it yet. So that $12.99 is part expense in June and part prepaid in July. It's the same payment, it just has a split meaning. So let's assume that you have a 30-day billing cycle. From June the 18th to June the 30th is 12 days. And so if you take $12.99 and you divide that by the 30 days, this is going to equal about 43 cents per day. If you take the 43 cents per day and multiply that by the 12 days in the June cycle, you get approximately $5.16. So $5.16 becomes part of the June expense, and $7.83 is still remaining in that prepaid asset. So at the moment of payment, you're going to debit your prepaid expense account for $12.99, and you're going to credit your cash for the same amount of $12.99. The entire amount starts as an asset. At month end, you recognize what was used. The entry is a debit to your subscription expense for the $5.16 and a credit to your prepaid expense. Now remember that prepaid expense is the prepaid expense asset, just for clarity. Now your statements show expense for June only and a remaining asset for July. Now, if you're really attentive, then what we need to do is make one correction. We said that when we make the payment, we debit the prepaid expense for $12.99 and we credit cash for $12.99. So if you skip this step, June is overstated and July is understated. Your financials become distorted, even though your cash is correct. So as a generalized rule, this applies to monthly subscriptions, annual memberships, insurance policies, and so on and so forth. Anytime a payment spans periods, you must split it into the portion from the payment to month end and from month end till the next payment. Now we take it one step further, because in real life, it's not always clean like this. In the next video, you'll see transactions that include a prepaid portion and an accrued portion at the same time. So in closing, subscriptions reveal something important. A single payment can belong to multiple periods. So we don't just record it, we analyze it. Cash happens once, but accounting follows time.